Hello again, I'm Walter Ledger, and welcome back. In our last video, we took that wild ride through Bitcoin's first decade, from mysterious creators to pizza purchases that are now worth hundreds of millions of dollars. We saw how Bitcoin survived every crash, came back stronger, and went from being dismissed by serious financial institutions to being embraced by them. But I bet some of you are sitting there thinking, okay, Walter, that's a fascinating story, but I still don't actually understand how this thing works. And you know what? That's perfectly fair. Today we're going to pull back the curtain and explain the technology that makes Bitcoin and all cryptocurrencies possible. Now don't worry, I'm not going to turn this into a computer science lecture. We're going to use simple analogies that actually make sense. By the end of this video, you'll understand blockchain technology better than most people half your age, and you'll see why this isn't just some computer geek fantasy. It's actually quite brilliant. Let me start with a story that'll make this whole thing click. Imagine your local gardening club keeps a shared record of who planted which flower at the community garden. Each member has an identical copy of this record in their notebook. Now, let's say someone tries to falsely claim they planted the prize-winning roses. What happens? Everyone immediately knows the truth by checking their identical records. There's no argument, no he said, she said. The truth is right there in black and white, verified by everyone. That, my friends, is essentially what a blockchain is. A super secure, shared record or ledger. But instead of tracking flowers in a gardening club, it's tracking every single transaction ever made with a particular cryptocurrency. And instead of a few dozen gardening club members, we're talking about thousands of computers around the world, all keeping identical copies of this record. Okay, this is where it starts getting a bit techy. Please note, you don't need to know this. It's just background info. It's interesting to understand that no one controls the blockchain. So no one can, in theory, steal your money. Many have tried, but no one has succeeded. Yet. And if it's good enough for Goldman Sachs, Morgan Stanley, and JP Morgan Chase, well, it's okay for me. Here's how it works when you actually send Bitcoin to someone. Let's say you want to send some Bitcoin to your nephew for his birthday. That transaction doesn't just happen instantly. It goes through a fascinating process. First, your transaction gets grouped together with other recent transactions into what we call a block. Think of it like collecting several pages of financial records that all need to be added to our ledger at the same time. Now here's where it gets really clever. Before this block can be permanently added to the chain of previous blocks, hence the name blockchain, it has to be verified. This is where those thousands of computers around the world come in. They all have to agree that your transaction is legitimate before it gets permanently recorded. The process of verifying these transactions is called mining, and it's like a global competition. Computers around the world race to solve a complex mathematical puzzle. The first one to solve it gets to add the new block to the blockchain and receives newly created bitcoins as a reward. Think of it like a lottery where your chances of winning increase with the amount of computing power you contribute. But unlike a regular lottery, the winner is actually performing a valuable service. They're securing the entire network and making sure all transactions are legitimate. This system creates several remarkable features that make cryptocurrency work. Transparency with privacy. Anyone can look at the blockchain and see all transactions that have ever occurred. But here's the clever part. Instead of seeing Walter sent $100 to his nephew Tom, you'd see something like Wallet 6A2B3C sent 0.002 Bitcoin to Wallet 9X8Y7Z. The transactions are completely transparent, but the identities behind the wallet addresses remain private. Security. Through numbers. Because thousands of computers around the world all have to agree on any changes to the record, it's virtually impossible for anyone to hack or alter past transactions. You'd have to somehow gain control of more than half of all these computers simultaneously, which is practically impossible. No single point of failure. There's no central bank, no single server, no headquarters that can be shut down. The network is maintained by thousands of computers around the world, making it incredibly resilient. Permanent records. Once a transaction is added to the blockchain, it can never be erased or altered. This creates an unchangeable historical record of every transaction that's ever occurred. Now you might be thinking, this is all very interesting, Walter, but why is this better than just using my regular bank? Well, let me give you a real-world example. Let's say you want to send $500 to your nephew who's studying abroad. With traditional banking, you might pay $25 in fees, wait 3 days for the transfer to complete, and deal with currency conversion charges on both ends. With Bitcoin, that same transfer could cost a few dollars and arrive in minutes, regardless of where your nephew is in the world. but the implications go way beyond just cheaper international transfers. This technology eliminates the need for trusted third parties in many situations. Instead of having to trust a bank, a payment processor, or even a government to facilitate transactions, the blockchain itself provides the trust through mathematics and consensus. Think about it. When you write a check, you're trusting that the bank will honor it. When you use a credit card, you're trusting that Visa or MasterCard will process the payment correctly. With blockchain technology, you don't need to trust any institution. You just need to trust math and the thousands of computers maintaining the network. Now, I'm not going to sugarcoat this. The system isn't perfect. Bitcoin can only process about 7 transactions per second, compared to Visa's capacity of thousands per second. This has led to congestion during busy periods, resulting in higher fees and slower confirmation times. But here's the thing. Solutions are being developed. The Lightning Network, for example, is a technology that sits on top of Bitcoin and enables much faster transactions. It's like building an express lane on top of the existing highway. You know, when email first came out, it seemed impossibly complicated compared to just picking up the phone or sending a letter. But once you understood the basic concept, that you could send a message instantly to anyone with an email address, the specific technical details became less important. Blockchain is similar. You don't need to understand every technical detail to appreciate that it's a way to transfer value directly between people without needing permission from banks or governments. It's peer-to-peer money for the digital age. Understanding how blockchain works is crucial, because it helps explain why people get so excited about cryptocurrency's potential. But knowledge without application isn't very useful, is it? In our next video, we're going to explore what people actually do with this technology, beyond just hoping to get rich quick. We'll look at real-world applications that might surprise you, from sending money to family overseas to buying your morning coffee, from protecting your savings in countries with unstable currencies to participating in entirely new kinds of financial services. Because here's the thing. Once you understand that blockchain is basically a super secure shared record book maintained by thousands of computers worldwide, a lot of the mystique disappears. What remains is a pretty ingenious solution to the problem of how to transfer value in our digital world without having to trust banks, governments, or payment processors. See you soon for what people actually do with this stuff.